G'day folks, Jim here from FX Charts, Thursday the 20th of February. Well, it was pretty much about waiting for the FOMC minutes today. They were slightly hawkish, tapering looks likely to continue, and that put a bit of a big tone under the US dollar. But it wasn't going to run away. There was some weak US housing data out, which capped any further rallies for that, and the euro actually was under a little bit of pressure itself today. Really because of the problems going on in the Ukraine. So the end of the session, really, the euro it didn't do a great deal. It's a little bit heavy at the moment. It's trading near its lows, but it's been a pretty tight day. The main action was in cable, where the unemployment data wasn't quite as good as expected, came in at 7.2%. Some analysts were predicting a decline to 7%, but that wasn't the case. So we're going to have a look at the charts, and it's as I say, it's been a fairly steady day. The euro's traded up to a high of 137.72. It's back down. It got down to 137.25 on the release of the minutes, and it's sitting around 137.35. Now the momentum looks to me as though we might be headed a little bit lower in the next few hours. I think I'd prefer to be a seller on rallies as long as we don't go above sort of 137.75. I think. I suspect we're possibly eventually going to head back to 137, the figure, but much depends. We've got the PMIs coming out today, the flash PMIs coming out of Europe and the States, and also before that China. We get the Hong Kong Bank flash manufacturing PMI out of there as well. So they're going to provide the direction for the day, but it does look a little bit heavy on the hourly charts, and if we go out to 4 hourlies, they look a little bit heavy as well. So we might get back down to, so if we can get back under 137, we're going to head down to this so 136.75 level. Now we've got a bit of work to do before we get there, but if we do get there, that's going to be quite important, I think. The hourly charts, as I say, are looking as they could head in that direction. But if we go out and have a look at the Ichimokus, we've got the daily cloud support down here at 136.75, and we've also got, if we go further out, we've got the weekly Tenkan at 136.80 or so, and as I've said before, we've got the monthly cloud here, which we're still trying to break up into. Maybe we're going to fail again, I don't know, but it's looking a little bit heavy. But there's going to be good bits at 137. And as I say, on the day though, I don't think we're going much above 137. Well, 137.50 might cap it. 137.75 or 70.75 right thereabouts. I don't think we're going above there, and I certainly don't think we're going to 138 in the next couple of days. Going on to dollar yen. Well, that's just chopping around 102. It did get down to 101.85 in the session as it just drifted off. But it rallied to 102.40, and it's sitting just beneath there at the moment. I'm a bit ambivalent on dollar yen. The charts aren't showing us, 1 hours are not showing us an awful lot. The 4 hourlies are also flat, and the dailies are really not giving us any guidance either. So if I had a choice, I think we're probably going to trade more in the 101.70, 102.70 range for the time being. I kind of still like buying dips, and as long as overall we hold the 101.40, which is this rising support line, it's also the base of the daily cloud. As long as that holds, then I think we're probably sort of heading eventually higher, but it's going to be a long and choppy process. Cable, well, that got a bit hairy, as you can see. The unemployment data saw it come off heavily. It rebounded to 167.30. Got 166.36 was the low. 167.30 odd was the high. Came back off just on the release of the FOMC minutes, and it's sitting around this 166.80, 166.75 level. Now the charts are reasonably flat. I think we're going to trade today as for 167.25 to 166.5 range. Possibly, I think if anything, where we could make another move to the downside to this 166.36 low, and possibly a little bit lower down to sort of 166, 160. That's 166.05, that level there. So the 4 hour charts are negative, but the dailies they do remain positive, although they might be they might be looking to roll over. We may have seen a fairly major top there, but I think all up it's going to be choppy. But I kind of prefer to think that we're actually going to slowly make our way south. And as with the euro, if that can get one through 137 and go down to 136.75, I think the same is going to happen with cable. And we head towards 166, possibly 165.5, but that'll be in the coming days. Dollar Swiss, well, not sure what to think here. It made this spike lower. It's recovered, but it's unable to take out 90 again. 90 the figure. If it does, we might see a move up here to this. Sorry, take out 89 the figure, not 90 the figure. We might see a move up here, or even up to sort of this 89.30 level. I don't really think so. The 4 hourly charts, although they are looking as though we might see a bit more of a squeeze, the dailies are actually suggesting that the dollar's got a bit more downside to go. Now that kind of conflicts a little bit with what we're seeing in the euro. So I'd keep an eye on dollar Swiss, as it can be a good leader, but at the moment it looks to me as though it's probably stuck in a bit of a range trade. Go back to the hourly charts, and this sort of 88.5 to 89 the figure, that could well hold it for the time being. The Aussie's looking a little bit heavy. It's broken back under 90, and it looks as though it's trying to give this trend support a bit of a nudge. Now we're sitting pretty much on the 200-hour moving average here. If we head low, 89.75 should support it. But we have got the HSBC manufacturing PMI come out, as I say. Now we're expecting 49.4 there. Anything less than that, we'll see the pressure come back on the Oz, and I think we could be in for a test of 89.20. Now that kind of turns around what I've been thinking the last couple of days, but the 4 hourlies are beginning to look increasingly heavy, and the dailies they look as though they might be rolling over. And when you look at the Aussie press that's coming out, there's not much going for the economy at the moment. Some more job losses yesterday at Telstra, and coming on the back of the other job losses that we've seen over the recent weeks, it would suggest to me that the Aussie probably is headed a little bit lower. But on the top side, I think 89.40 will probably cover it today. I don't think we're really going that high, to be honest. Maybe 89.20 if we're lucky, unless the PMI number is an exceptionally strong one, and that the surprise would be to the top side. But I suspect that's possibly unlikely today. And if we can take out this 89.75, then we are probably headed back down to this 89.20 level. Kiwi, well, that chopped around a bit today too. Got down to sort of 89.70, went back up to 83.40, and it's come off reasonably heavily ever since. Now it's just about sitting on support here at 82.65, but we're right on the 100-day moving average, just trying to break below it actually. If we do head lower, there's going to be support here around this where are we, 82.30 level. So where are we at the moment? 82.65. Yeah, 82.66. So we might come back down here, and at the end of the day, though, I still think we're probably in this 82 to 80, sort of 3.5, 84 cent range. And as I've said many times before, I wouldn't be getting too excited either way. Although the dailies are looking to head a little bit lower. So that's really about it today. As I said, it'll be the China manufacturing PMI will be first up. As far as focus goes, and then we've got the European composite services and manufacturing PMI, the flash data there, and finally we've got the US CPI coming out later in the day. I think 1.6% from memory is the year-on-year expectation for that. So it could be a volatile day. There's a fair bit out. So that's about it. Have a very good one, and we'll talk to you tomorrow. Cheers.